Everything you're about to hear is for education and entertainment purposes only. Whilst we are licensed, we're not aware of your personal financial circumstances. Any advice is general advice. Equity Mates operates under Australian Financial Services Licence 540697.
Equity Mates!
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Welcome to another episode of Equity Mates, a podcast where we explore what's possible in the world of investing. If you have just joined us for the very first time, a huge welcome to our community. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How are you?
I'm very good, Bryce. Very excited for this episode. Always excited. But this is a particularly exciting week for us here at Equity Mates because we have a new show launching, one of our biggest launches in a long time. So we'll share the details of that in a second. But it's not just new shows that have us excited. It's another big week in markets. We're going to talk about stocks on our watch list. We both keep notes from all the content we do, and we've got a number of stocks we want to share. We've got to Pimp My Portfolio. Adam Dawes is back in the studio to review the portfolio of an equity mate, and we're going to talk about all the news of the day. But Bryce, before then, the big news for us this week is we are launching Basis Points.
Yes, Basis Points is the new show and channel that is coming to the Equity Mates Media Network. And it is designed for financial advisors and industry professionals. But that's not to say that you guys can't come and listen to it as well, because we're going to be speaking to some of the best financial advisors and asset managers around the country.
Yeah, that's right. It will be a little bit more of an advanced conversation than we have on Equity Mates, maybe a little bit more jargon, a little bit more technical. And for financial advisors, the majority of episodes are accredited by the FAAA for CPD points. The instructions will be in the YouTube description or the show notes for those episodes. So head over to Basis Points. The trailer is live. The first episodes drop on Tuesday. So depending on when you're listening to this, the episodes may have dropped. Over the next few weeks on Equity Mates, we'll be sharing some of the episodes as well to give everyone a taste of the new show. But yeah, it's one of the bigger launches for us in a long time. So we're particularly excited about it. So if you enjoy what we do here, if you want to help us, we'd love you to support the new show.
There'll be a link in the show notes to sign up to the email that will accompany it. So make sure you jump on that as well.
All right, Bryce. Well, with that said, let's get into the news.
News and markets.
There's some good Aussie macro news. The future obesity rates are pretty alarming, and we're going to obviously dedicate 1 minute only to Donald Trump.
Yeah.
Let's start with the macro news here in Australia, though, Ren, that is good news for once in a while, I guess.
Maybe we can tie all these stories together by saying our economy is getting bigger and our waistlines are as well.
Yes, well, Australia's latest GDP figures show Australia's economy in the December quarter grew at its fastest rate in 2 years. The economy grew 0.6% for the quarter and 1.3% for the year.
Yeah. Now, that's good, but this is the thing that we think is particularly good news. GDP per capita grew.
Yes.
So for 7 consecutive quarters, GDP per capita fell while overall GDP rose, which means that the increases in the overall economy were driven by population growth.
Yeah.
Which is good. It's better than the economy going backwards, but it's not good in the sense that individual people's living standards were falling. Well, Bryce, I've got good news for you because GDP per capita grew by 0.1%.
Just as we cut rates as well.
Any growth is better than no growth, and correcting the slide of 7 consecutive quarters of GDP per capita decline is good news.
Yeah.
Good news, but it's marginal growth.
It's flat. Yes, you're right. Yeah. Any good news is good news, I guess.
Any news
is good news.
Well, that's not true. There's been plenty of bad news recently. It's funny. There's some countries that have discussed doing well-being budgets. So you know how the treasurer will get up and deliver a budget and deliver overall GDP as like the key metric. There are some countries that speak about changing what the metrics are. And I, for one, like the idea of the key metric for the treasurer should be GDP per capita rather than overall GDP.
Yeah.
Because it is a better reflection of how Australians are going, how our living standards are going. And ultimately, that is what we want governments to do.
Yes.
Not deliver overall economic growth, but deliver per capita economic growth. Make our lives better.
Yes.
Anyway, rant
I
over.
agree. Rant over. I think what it does do at least is it'll, I think, only confirm economists' expectations that there won't be more rate cuts coming. Oh wow! If there's a hot economy per capita.
Oh yeah, okay,
like
yeah, I see what you're saying. Yeah,
like,
it's funny. It's like annual GDP growth is 1.3%, and we're like, oh, the economy's hot.
I know.
But look, any growth is good growth at this point. But reversing the trend is probably the news that is worth noting. Speaking of trends, the one trend that is certainly not good news is growing rates of obesity. Yes. And there was a study published in The Lancet, the medical journal, that found more than half the world's adults are expected to be overweight by 2050. Specifically, 57% of men and 60% of women will be overweight or obese by 2050 if nothing changes. And that is factoring in the increased availability and use of GLP-1 weight loss drugs like Ozempic. So who knows what those numbers would be without that intervention. But perhaps the most worrying news, the study found 1 in 3 young people between 5 and 24 would be overweight and obese as well.
Yeah, that's crazy. Yeah. It's all it's the food that everyone's consuming. It's wild.
Yeah.
Like,
I mean, like this is a controversial statement from me. RFK Jr. is nuts in a lot of ways.
I know.
But some of the conversation around ultra processed food is a worthwhile conversation, I believe.
I do agree with that.
We also have to be mindful that a lot of what's in American food has been banned in Europe and Australia.
Yeah. This, for me, ties back to what I was trying to say with the Eli Lilly pitch a number of weeks ago, which is just that the tailwind behind those companies, if they can become more accessible and, i.e., cheaper and less, I guess, intrusive, or not intrusive, but less grotesque than shoving a needle in the thigh.
These numbers that people will like. Yeah.
The TAM, the total addressable market here for Ozempic or for Eli Lilly and Novo is just wild.
Yeah.
It's just wild.
It is.
And I think as this trend only weighs further, no pun intended, on countries, the governments, I think, are going to do more and more to get those drugs in people's hands.
Yeah, well, I mean, like if you're a public health economist and you start thinking about the investment in these drugs relative to the cost of, caring for people with chronic heart disease and kidney disease and all the weight-related diseases that emerge, the maths is compelling.
Yeah, absolutely.
And the investment opportunity in some of these companies is compelling. Not that we're giving specific investment advice, but we are both long GLP-1.
Definitely.
Yeah.
Definitely.
All right, Bryce, we said we would close with Trump news. We're trying to avoid going too hard into the Trump headlines because it's overwhelming. But we'll do a minute. Just what's top of mind with this whole Trump discuss?
It's just alarming how quickly he's changing the world order. And I think if you look at what he's done with Ukraine and what he's doing with tariffs and just how he's essentially just becoming a world bully and seesawing markets at the moment. Yeah, it's hard to keep up with, to be honest, and it's depressing to keep up with. I'm finding.
Yeah, I'm finding the first thing I do when I wake up is I check the New York Times, and if there's not like a crazy headline, like my dopamine receptors are like, I need that hit. I need something.
Yeah.
When he was elected, there was a lot of Democratic media and stuff that basically said we need to watch what he does, not what he says. But it's like, it's almost impossible to not get sucked into what he says.
I've been going deep on YouTube on watching a lot of the Canadians' response to the tariffs.
Oh, yeah.
Yeah, and it's been interesting seeing a lot of the leaders of the provinces all talk about how they are going to be specifically targeting reciprocal tariffs for Republican states to really try and hurt those states that effectively would have been voting for Donald. And you think about Canada's their biggest trading partner by far. I've heard that one of the hopefuls for the incoming Prime Minister wants to put 100% tariffs on Teslas if she gets in, to try and stick it to Elon as well. All the minerals that aluminium, potash that they're all importing from Canada, they want to really hurt the industries in America that use those. So it's going to be ugly.
Well, I mean, that's what China is also doing by targeting negotiating US agricultural products.
Yeah.
You say it's going to be ugly. I honestly reckon between the time we record this and the time it's released, there's a chance that he lifts a lot of the tariffs.
Well, he's already walked back on automakers.
Yeah. It's just like it's the
But what's
ultimate
he
negotiating
doing?
tactic. But you'd be shitty if you were the Mexican or the Mexican president or the Canadian prime minister, knowing that you negotiate. Last month they negotiated around increasing border security and border crossings in Mexico have dropped.
Yeah.
And then it's like, all right, well, now we're negotiating again. And next month we're going to be negotiating again.
Off.
Yeah.
It's crazy.
Anyway, we said we were going to do a minute. I think we've done over a minute. So let's get back to investing. Let's get back to building our long-term portfolios. And one way we love to do that is by getting an expert in the studio and putting a Equity Mates community member's portfolio in front of them for them to review. And so in a sec, we're going to be joined by Adam Dawes to do exactly that.
Well, it is time for...
Hit my portfolio. Hit my portfolio.
That's right, one of our favourite segments. We are back in the studio with an expert and a community member who has submitted their portfolio to get the thoughts from our expert. Adam Dawes, welcome to the studio.
Great to be here, guys. It's fantastic.
Always a pleasure. And on the line, we have Lucas. Lucas, how are you going?
Yeah, good, thank you. Massive fan of the show, so absolutely rapt to get through.
Well, thank you for submitting. We appreciate the support, and hopefully Adam can give you a few ideas today to help improve the portfolio. So Ren, as always, do you want to take it away?
Yeah, so Lucas's portfolio, I'm going to split up into a few different buckets. About a third of the portfolio is core index tracking ETFs. Then we've got about just shy of 20% of the portfolio are thematic ETFs. So just shy of 60% are either core or thematic ETFs. Then it gets a little spicier from there. We've got about 6 or 7 individual stocks, which is about a quarter of the portfolio. And this is one that I'm interested to get Dawes's perspective on. 12% of the portfolio is in crypto, including a Bitcoin ETF. But then finally, Lucas, 13% of the portfolio is in cash, which I imagine Dawsey will have some ideas on how you can deploy. So, Dawsey, before we ask Lucas some questions about the portfolio, we like to get a nickname.
Yes.
Have you got one for Lucas?
This portfolio is a very good portfolio, Lucas, but it is a galaxy far, far away, and we're going to call it the Star Wars portfolio for George Lucas.
Okay. Nice. George Lucas, there we go. Works on a number of levels. So, Lucas, how did the portfolio come to be? Give us a bit of the story.
Yeah, so look, I've been investing since I was probably, I'd say 12 years old, investing dad's money in anything with a cool ticker. So losing pretty much all of that. And then obviously as I got a bit older, I started listening to you guys, started reading a few financial books, and decided to dollar cost average and get into a few individual stocks that I really liked. Recently, I had to sell down a lot of my stocks just for a house deposit. So at the moment, it's a bit of a mess. So keen to get Adam's thoughts on how to rebalance it and restructure it.
All right, then. Well, look, I mean, Lucas, it is a fantastic portfolio as far as that you've got a good smattering of individual stocks, thematic ETFs, as well as then those sort of Vanguard diversified high growth index ETFs, or those sort of big ones.
Yep.
Just run me through why you've got the VDHG inside of a portfolio of another sort of 15 stocks.
Yeah, sure. So that was actually my first ETF that I ever bought.
Okay, that makes sense.
And that was my staple of dollar cost averaging into that. So that kind of market share of my portfolio got quite big. So that was one that I did sell down recently as well.
Yeah.
But I do notice there is overlap between that and a lot of the other ETFs I have. So that's where I just want a bit of help restructuring it all.
People with small balances, a VDHG is fantastic, right? Because it covers all of your bases. It's perfect.
Yep.
But if you've got a larger portfolio and you've got all these other individuals in there, I think it's a bit of a waste of time for you to have that, because you are too diversified, and you know, it's got bonds in there and all that kind of stuff, which you can probably do yourself if you really wanted to sort of step it out a little bit more. So I think overall, I'd be sort of moving away from that. I don't think you need to have that in the portfolio. You've got some smaller stuff, Weebit Nano, which has obviously been a really good one, but now not so good. And then you got Macquarie and Fortescue, which, you know, fantastic sort of big, you know, large cap businesses as well. I think with the rebalance, what you want to be doing is looking at the individual sectors. You've got US, you've got Asia, And you've got Europe, so I think you're doing quite well. Maybe a VEU, so like an all-world one to capture all of that kind of stuff, I think is probably pretty good. And then just walk me through the Bitcoin. Are you just doing that?
Why not?
For the fun of
Bitcoin,
it?
we just don't know you, Adam.
It's working. But anyway, keep going. Yeah.
The Bitcoin was just it's just a dollar cost average type thing, kind of set and forget, just leave and see what happens.
Yeah.
Set and forget and just is what it is. I just, I invested in Bitcoin and Ethereum. So those were kind of my main two that I just,
Yeah, right. Okay.
Couple hundred in that and that's it.
So, Adam, I just want to pick up on what you said earlier because a lot of people will probably be like, oh my God, am I wasting my time with VDHG?
There's a lot out there.
Yeah, so
in
when
the community, definitely.
there are a lot
out there.
There are a lot of people
much.
and rightly so,
Yeah.
because it can be your one-stop
Correct.
portfolio.
Correct.
And so when you're saying it's a waste of time, what you're really saying is it's a waste of time if Lucas wants to pursue going and continually picking individual stocks and also continuing with this, portfolio of other thematic ETFs because the overlap is just so large.
It is large. If you've got only 10 grand when Lucas, you said that was your first one, so that makes perfect sense, right? Because it's your first one, it gives you all the diversification. And then as you start to build out the portfolio, it starts to lose a lot of its power because you're adding more stuff onto there and then you're overlaying and you're overlapping.
Yeah.
Generally with a lower balance, it's a perfect idea because you've got 10 grand and then that's it. But if you're then sort of circling out and you're getting to 100,000 and plus, I think it's a waste of time. You could definitely do it yourself.
Okay. Yep.
And I think that with the IVV, VAU, VEQ, you're getting that country sort of sector side of things, which is really, really great. The hack has been doing very, very well for you as well. So keep up with that. But then, basically reweighting the portfolio to look at country like an all-world one, but then obviously look at potentially gold. You know, we've got to have some gold in the portfolio or some of the commodities, copper or uranium. Sort of then blend that out a little bit for those kinds of things.
Yep.
And with the cash component, dollar cost averaging is huge, and you've got to do that every month, right? Regular contribution strategy every month. You need to do that. That's something that I think you need to work on and potentially finding the better ones to put it into. So IVV obviously is a really great start, and then you can sort of work your way out from there.
Yep.
And then some of these smaller ones, I don't know if it adds too much value, the Weebit Nano, INR, those kinds of things. What was your sort of reasoning behind those? Bit of a punt?
They were, those two or three. I actually bought INR on both the American and the Australian stock market. So that was the kind of lesson to myself. I wanted to see how they kind of compared to one another. Yeah. I actually heard about both of those on the Equity Mates podcast. Yeah, I did my own research into those as well.
Perfect.
And just the company at the time was pretty attractive, let's say, especially INOR, but it hasn't been doing too well lately. So I was wondering if you think I should just kind of sell those down, take the tax write-off, and then put them towards the ETFs.
They're smaller holdings, so you're probably not going to kill yourself by doing it. So I think that's not a bad idea to look at something like that. And just be careful with the thematic ETFs. Thematics do run well.
What was your opinion on, I've got quite a large one in I think it makes up 14 or 15% of my portfolio, that's semi ETF that obviously tracks the semiconductors, but it's run a little bit now.
Yeah, I think you're in the right space. I mean, semiconductors is certainly something that we've got to be mindful of, that it is going to continue to grow. Just be careful. I mean, the hack one is pretty good as well, but there's other ones that have really sort of fallen away, the ACDC or the lithium side of things, or the battery ones. So just be careful with those thematic ETFs. They can turn really, really quickly, and then all of a sudden you're sitting there going, "Hang on, I was up 10 grand, or I was up 10%, and now I'm down and I'm in a losing position." So be really careful with those thematics. They do swing around a fair bit.
Yeah, I think what we've learned over the journey is think of thematic ETFs the same way you think of stocks. Just like treat them the same, review them in the same cadence, because sentiment can turn very quickly there.
Very quickly, yeah.
So Dawesy, touched on the cash and you said you want Lucas to focus on dollar cost averaging, but I think when he was explaining his portfolio, like he does have a dollar cost averaging strategy for that core portfolio. So 13% of the portfolio in cash. Lucas might be making a call about stretched valuations in certain markets and the
or he's just a little bit lazy.
But
One or the other.
What's your view on like an appropriate range of cash to have in the portfolio?
10% is fine, definitely. I mean, you want to have we call in the industry keeping your powder dry, right? So you've got a little bit of ammunition sitting on the sidelines if you do see something. And the market's had a good sort of 2 to 3% pullback of late. So there's opportunities and values starting to come back into the market. So it's still not there. So a 10% value, cash is perfect. But regular contribution strategy, while the market's moving up, you're putting money in, and when the market's moving down, we don't learn about compounding interest at school, but that is fantastic compounding side of things. And if more people did that regular contribution every month instead of lump sum investing, there's a lot of history to say that that's got far better reach and far better side of things. So, but getting your cash to work, I think it's important. Yeah,
as long as it's sitting in your offset account while it's doing nothing, Lucas.
Yeah.
You've just bought.
That's it. That's it.
Hard to beat that offset account. But anyway.
Yeah.
Any closing thoughts, Dawesy or Lucas? Did you have any closing questions?
I think that's all good for me. So are you saying to sell down my Bitcoin? Is that what you're saying, Adam?
No, I'm not saying sell it down.
He's saying put the 10 grand in.
double down. No, look, it's volatile. We know that. And if you're comfortable with that volatility, then ride the wave.
Yep.
It's part of an investment portfolio, but just be careful. That's all it is. It's just too volatile for me.
And I think if it runs, just watch the weighting in the portfolio.
Yes.
Great
call.
Yeah.
Great call.
Love it. Well, Lucas, a few things there for you to think about. I hope you got what you wanted out of today, and we certainly appreciate
Definitely.
you,
Thank you all.
submitting to the show. So thank you very much, and thank you, Dawesy.
Great to be here.
And if you would like to chat to Dawesy and the team or any of the other advisors in our network, head to equitymates.com/advice. Dawesy is also offering a portfolio health check. So you can go to him and his team, and he'll give you a personalized investment portfolio review with expert guidance aligned to your goals. You'll also get a tailored statement of advice for $750 plus GST. So if you would like to get a professional portfolio review, head to equitymates.com/advice and we'll connect you. Welcome back to Equity Mates. We're now going to jump into some of the stocks that are on our watch list. And these stocks have, landed on the watch list because, Ren, we're in a fortunate position to be able to talk to expert on expert across many of the shows that we do here at Equity Mates. And a number of the stocks either continuously pop up or kind of pique our interest. And so we note them down. So for the month of February, we have a list here of stocks that are on our watch list that we're going to quickly go through and just jam around.
Yeah. Well, should we just start by reading out the list and then we can talk about some of them? So, New Holdings, Alphabet, Eli Lilly, Markle, Reddit, Ordinate, Corpay, SiteMinder, QXO, and Nike.
Yeah.
So these are ones that we've noted down from interviews we've done or content we've spoken about that are like, that was an interesting conversation or an interesting idea. Some obviously very well known, Alphabet, Nike, Reddit. Some, I reckon, people wouldn't have heard of before. Corpay.
So QXO, Ren, that was one that we spoke about with the best entrepreneur that you've never heard of.
Yeah, that's right.
Yes.
Brad Jacobs, who has...
American billionaire.
He's done 4 roll-ups where he started a company and rolled it up. He started with waste, sold that to Waste Management for about $2 billion. Then he did equipment rentals. Then he did logistics. And now he said he's got one more in him. So this is his 4th round-up business and his roll-up business, I should say. And he's doing building supplies.
Nice.
Yes.
All right. Well, let's start with perhaps New Holdings. NU Holdings.
Yeah. So this is the company that owns Nubank. I wasn't familiar with them. They're a Brazilian online bank, fintech. We first heard about them on a Pimp My Portfolio where Luke Larrative looked at the portfolio of an Equity Mates community member from Brazil, Apparently we're big in Brazil.
Yes.
But new holdings, let me just read you the revenue growth. So this is the past 6 years revenue growth. 111%, 39%, 87%, 116%, 100%, 49%. In that time, they've gone from 150 million in revenue to 5.5 billion.
You can really get into a bubble sometimes just focusing on America and Australia. I'm not focusing, but just getting captured in those headlines and forget just how wildly large those South American markets are.
Yeah.
They have 114 million customers across Brazil, Mexico, Colombia, like massive markets.
Yeah. I've also seen a bit of chat around Mercado Libre, which is listed in the US. Melly is the ticker, but that's like the e-commerce giant in South America.
Well, three that we've spoken about plenty of times on the podcast is Alphabet, Eli Lilly, and QXO. So we won't need to labour on them too much, but certainly they keep coming up not only on our podcast but through experts as well. So
there's a real meme going around on Twitter at the moment, which is like, is this the chart of a dying company? And it's just Alphabet's quarterly earnings per share, and the earnings per share is just, it's looking great at the moment. It's growing, but everyone keeps talking about it dying. Search, it's going to die. This is going to die. Yeah. It's trading at 20 times earnings.
Yeah.
It's cheaper than Commonwealth Bank.
Well, everything's cheaper than Commonwealth Bank.
The Tesla isn't cheaper than Commonwealth Bank.
Now, a few that we've actually had come through from the conversations we've had on basis points have been really interesting. So there's one from Eric Murray, Corpay.
Yeah, so this is like a corporate credit card company, but their business model is they issue these cards to businesses, and then with the buying power they have, they then go and negotiate preferred deals with certain suppliers. And so then the business only uses those suppliers. So for example, they negotiate with just one service, like petrol station. So they negotiate with Shell, for example. Shell gives the businesses a discount, but Shell is giving them a preferred deal because they're then getting all those customers. And Corpay is giving Shell a heap of customers, is giving the businesses good deals, and just clipping the ticket on the way through.
Yeah.
And it's that's an interesting business model. Like, it's not one that I'd ever heard of before. Yeah. I mean, go and listen to Basis Points when this episode drops, with Eric drops tomorrow, because it was a fascinating one to talk about. And there are some risks, and he notes the risks with them, but I just love finding new businesses that are just nothing crazy, just innovative business models.
Yeah. No, that was a great interview. Definitely go and check it out. One that I think continuously interests us is the Mini Berkshire that we actually saw over in Omaha, and that's Markle, the insurance company that are effectively doing a very similar business model to Berkshire, using their insurance float to then go out and make investments.
Yeah. This is just one I was just thinking about recently, and why I put it on the list. Just hasn't come up in any content, but it's just like, it's always one that's
Great
like, if
model.
you want like a really slow growing, boring business.
Compounder,
Yeah, and I mean, this is one. Yeah.
Now, did we miss it?
Yeah, Reddit. Scott Galloway's been banging on a lot about Reddit recently.
Yeah.
9th most popular website in the world.
Yeah.
Share price is up 3x since it listed.
I'm actually annoyed because he was banging on it before it IPO'd.
I know. Well, he was a shareholder.
He was a shareholder, but he was just like, this is a layup.
Yeah.
And we completely missed it. Anyway.
So it's valued at about 20 odd billion now. It's about the same market cap as Pinterest. And I wanted to find Pinterest where it sat in the most viewed websites, because I thought it would be funny to be like, Reddit's 9th most, Pinterest is 200th most. Pinterest is pretty strong. It's like 24th or 25th most viewed website in the world. So good on you, Pinterest.
Nice. I hate it.
Pinterest?
Yeah, I find it so difficult to use.
Can't say I'm a big user, but yeah. I like Reddit. I find I'm using it a lot more these days.
Reddit?
Yeah.
What for?
Well, I did this thing where I put 1 sec on my phone, which like stops you going into an app. You've got to, if you try, so I set it for Instagram, and so whenever I open Instagram, it like makes me pause, which is really effective. I've been going on Instagram heaps less, but I've just been going
for Reddit rather than put your phone down.
And Twitter heaps more. Baby steps.
Substitution's too easy.
Yeah, it is. But like maybe it's better for my mental health. Twitter, definitely not.
No, I was going to say Twitter.
So 2 more Aussie stocks that I've just been thinking about recently. Ordinate.
Yeah, big time.
So Ordinate was a market darling, still is, but like it could do no wrong. Everyone was piling in. About this time last year, a bit less than a year ago, it just
got pumped.
Yeah. Started falling. It's down 65% in a year. And I've just been watching it fall and I'm like, obviously it got too far over its skis with the hype, but at some point, like, it's come down enough.
Yeah.
Interesting.
You're interested in getting back in or one to watch?
I wasn't on it.
Oh, okay.
Yeah, but right. Like I would get in on it.
Yeah.
SiteMinder is an interesting one as well. It got pumped after its recent report. We first heard about it when we spoke to Paul Wilson from Bailador
years ago,
and they loved it. And it just seems to keep doing the thing. It basically is like a hotel management system for inventory management system for smaller hotels who have to now list on all the thousands of Booking.com and all those platforms and helps them manage pricing and inventory and the like. Similar to WebBeds, maybe?
I think similar, yeah.
So anyway, they got pumped after their recent report. I think they're down like 25, 28%.
Yeah, but still solid business.
Yeah, well, it seems that way. Just, again, these aren't buy or sell recommendations.
No.
These are literally just names that we write down as we do all this content to go and research further. And that leads to the final one that we have heard a few times on this content, including an interview we've just finished this morning that will be dropping on Basis Points, not as part of the launch, but later in this month.
Yeah.
A well-known company.
Yeah, Nike. I reckon we've heard it twice this week alone. To be fair,
true. On different podcasts, different interviews, we've heard it twice.
To be fair, we heard it first with Mr. Beat Up here on Equity Mates.
That is true.
If you want to go anywhere for information, it's right. It's right here. But yeah, I feel like now you're starting to see a lot of the big guys really buy into the whole transformation story, which is surrounding Nike. The new CEO's in, consumer confidence. They know what they've done wrong. They know what they need to do to get back to where they were. And so it's not a surprise that we're starting to really see people talk about it from a valuation perspective, but then also a turnaround story. So, yeah.
So that's 10 stocks that we've made a note of in February. I think the notable thing for me, at least, is there are some where the story is they've been beaten up heaps. Has the market overreacted? Ordinate, SiteMinder, Nike. Then there's Alphabet as well, yeah. Then there's some which are just flying and it's like, is this a growth train to get on? New Holdings, Reddit. Eli Lilly, Reddit. And then there are some which are like arguably quite boring businesses that just grinding it. Markle, Corpay. So my takeaway from that, heaps of different ways to make money in the market.
That's it.
There's no one right way to make money. There's plenty of different strategies, plenty of different philosophies, value, growth, whatever it is.
I'm kind of peaking because I was going to do Eli Lilly as my stock of the year.
And you did Alphabet.
And I did Alphabet.
Yeah.
Eli Lilly's up 20% year to date.
Well, as we spoke about in the first segment, if 60% of the world is going to be overweight or obese, they've got a big total addressable market.
Yes. Anyway, we'll do the same thing at the end of March to let you know what other companies have come across our desk across all the content that we've done.
Well, let's make this interactive as well. Like if you're watching or listening on a platform that can comment, so Spotify or YouTube, leave a comment. Let us know stocks that you've added on your watch list because basically this whole media business that we've built is just a giant funnel for us to get the best investment ideas
literally
and put them in our own portfolio. So keep pushing stuff down the funnel for us.
So make sure you check out the new podcast dropping tomorrow, or it may already be dropped by the time you listen to this. Basis Points, sign up to the email. We'll put a link in the show notes. But Ren, as always, great to chat stocks. We'll pick it up next episode.
Sounds good.
You have been listening to an Equity Mates Media production. In the spirit of reconciliation, Equity Mates Media acknowledges the traditional custodians of country throughout Australia and their connections to land, sea and community. We pay our respects to their elders past and present and extend that respect to all Aboriginal and Torres Strait Islander peoples today. This podcast is intended for education and entertainment purposes. Any advice is general advice only and has not taken into account your personal financial circumstances, needs, or objectives. Before acting on general advice, you should consider if it is relevant to your needs and read the relevant product disclosure statement. And if you're unsure, please speak to a financial professional. The hosts of this podcast and their guests may have positions in the companies mentioned. Equity Mates Media operates under an Australian Financial Services Licence 540697.